All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for January 5th, 2022. So today we had some Fed commentary, and the market treated that with a royal smackdown. I want you to notice carefully this fair value price at 476, which was also yesterday's low. All right. So that thick purplish line right there, that thick pink line, is also yesterday's low, and that's the breakdown below yesterday's low. We're going to see what happens when that happens. And then the move on the breakdown goes all the way from the top of the dragon, through the PSAR dot, all the way down to a new 10-day low, just inches above the Bollinger Band mean at 467. Excuse me. All right, so day one of a sell-off after what has been a strong move up, and then 6 days in a row of sideways chop with narrowing volatility. And rather than breaking out to the upside, it broke to the downside today. So we would not be surprised to see a second day of selling tomorrow that takes it through what is currently the 10-day low, which was today's low, through the Bollinger Band mean. Now, if it gets through the Bollinger Band mean without recovering, then the next, that's where I would pick up a second position intraday for the short. And this support level is the belly of the dragon, and that's at 436. So that's going to be a key price level tomorrow. About 463, excuse me, I should say. The next price level that's key would be at the belly of the RL10, which is at 460. So that's going to be a key price level. And if that one fails, that's where I would pick up a third position short. That also is pretty close to the RL, or I'm sorry, to the Z -1. That's the breakdown below the river at 459. So I'm going to call that really kind of the same price region. That if those two break, then the next thing is a 5% sell-off at 456. That would take that down. Is that within range of on one day's move? Yes, it is, because today's range was this big. So that could easily get to there tomorrow, to the 5% sell-off at 456. And then if that one breaks, you want to be all in on the short all the way down to Z2, which then is testing all of these support levels over here at like the 30-day. The 30-day low is here. The belly of the dragon, or the belly of the RL10, is there. The belly of this dragon is also breaking around 458. So there's a lot of tripwires in here that are set up for like an avalanche of selling tomorrow if we're not careful. So the downside should be very much respected tomorrow, and collapsing dragons ought to be uppermost on your mind. And so tomorrow, if you see lower highs, be on the short side and don't take the long side trade. Stop chopping around in the middle of the river and getting ground. You want to be on the side of the angels, in this case, the collapsing dragon. Now, the upside is easy to see, because we would say, oh, well, today was just an anomaly, and this is a bullish normal conditions. So for me, a price that gets above 469 now is the beginning of an upward move to get back to the into the dragon, and then out of the dragon as a retest. Now that one's harder to believe in, because the most recent experience was a big smash to the downside. And it's hard to see where the heroes would be coming from that could support this kind of move. So tomorrow, be especially ready, for the night of the long knives tomorrow, a second day of follow through to the downside. Be ready for that tactically. All right, let's take a look at the sectors. Let me know in chat if that was helpful. All right, so today, the S&P was down almost 2 full percent at minus 1.92. What was better? Emerging markets were fractionally better at 1.63. The diamonds only lost 1%, and treasuries gave up 0.5%. You would have thought they'd have done better today. That's really the only sign of optimism I have for tomorrow. Weaker than the S&P, technology down a full 3%, and the Russell down 3.4%. So this was a huge vote to the downside for the U.S. markets, and especially these, the speculative fast trading indexes, the NASDAQ and the Russell. All right, let's look at what was better today than the S&P. Let's start with the other side of the trade. Well, we had Simon Property Group, commercial real estate, and finance was a little bit better. So that retains yesterday's notion that the, finance, energy, and materials were better. And so they were less worse today. So there's finance at 1.16, and just skipping ahead, there's your materials, energy, and consumer staples, all basically flat. So rather than losing 2%, those sectors were a full 2% better. So yesterday's insight about the continuity in the market kind of paid off. The S&P's 2% drag they overcame in order to be flat, right? All right. To resume then, so lumber, Mexico, and agriculture were down 0.9 and 0.5 respectively. You have blended commodities, the other lumber, and oil between minus 0.4 and minus 0.3. Now getting into the green, we have only the VIX up 7.9%. Now, I want you to replay yesterday's video discussion about the materials and the S&P and the metals. This is, man, I couldn't have written this any better. And so I'm just going to say it again. Yesterday, what we talked about was, why we watched the S&P, the Russell, and tech were both down big today. Diamonds were kind of in the middle. Emerging markets were slightly better, and treasuries lost the least. So in terms of the U.S. markets, the two that were better than the S&P, one was an international market and one was the non-equity in the treasuries. And then the other thing that we had yesterday was that the S&P was flat, but tech was down. So both XLK and the Qs were worse than the S&P yesterday. But what was better was materials, energy, and finance. And then when we zoomed in on materials, we said what was better was US Steel, X, Cliff, TX, and the only metal that was worse was Alcoa. So we said all other things being equal, we would look to see materials, energy, and finance to continue to be better than the S&P, and then the metals to continue to be better than materials. So I said my focus for today was going to be on X and CLF, and those things crushed right from the opening. So this is called using the radar screen or the logic chain, that we start with the S&P. What is it doing? What is its context? Where is it in the daily range, and where is it in between the 10-day high and low, and what's it doing? Yesterday, the S&P was in the 6-day near a 10-day high and was unable to break out to the upside. So the least surprising move would be a sharp move down. And when the S&P came down, yeah, sure, XLB, E, and F all came down, but they were basically flat for the day when the S&P was minus 2%. And then inside materials, the ones that dominated, Cliff, Tex, US Steel, and Alcoa, all the metals. Where's my stupid pen here? What I was trying to show here. Yeah. So all the metals were the winners today. Cliff, 5%. TX, the steel company, 5%. US Steel, 2.3. Alcoa, with a nice big rebound from yesterday, 1.7. Better than XLB, which was slightly better than energy and consumer staples. That's the lesson. Learn that lesson. Learn it well. You want to find the movers. What's your job? Find the movers. What is finding the movers? That's my job. All right. And then concentrate on the ones that are working. All right. The other industrial that did well, John Deere, 0.2. And that's about it, except for the metals and John Deere. There's these indexes that were either flat or holding on, but everything else got smashed. So that's why tomorrow is postured for another big down day, at least early in the morning. All right, what was worse? Brazil, 2.6. Discretionary, 2.7. Wheat and precious, 3%. Oil exploration, 3%. The S&P Tech and the FANGs down 3 and 3.3. Lithium, 4.7. Tesla has given back another 5%. So it's off 10% in 2 days after the 13% bump based on all their good news of earnings. All that's gone. Truth changes pretty fast. The Bitcoin Trust, or I'm sorry, the Bitcoin futures down 5.5. S&P Bio, marijuana, blockchain, clean energy, the Bitcoin Trust, 6.25. Moonshots, both of the ARCs down 7%. The large cap blended crypto, 8. Virgin Galactic and Ethereum, 10%. And then the individual targets that were horrible in the bloodbath that was the cryptos. All of the financial disruptors also get smashed. Squarespace, Robinhood, Coinbase down 6% and 8%. Even Microsoft, tech leader, 3.8. So that's you got to be rigged for heavy weather tomorrow, because it's not looking good. So in our fascination with the short-term trading and getting really close up and in person and trying to take every signal, try this sometime. Just step back and look at the 10-minute move. So this is today on the 10-minute. slight downward pressure leading into the Fed. And then the Fed says something, and here's where it breaks out below the, comes out of the floodplain and breaks the previous Z3 pinch. After the Fed talked, it went up and then slammed down and then broke below this Z3. And it broke below 476, which was that key price level. That was yesterday's low. That's what this price level shows. It's also the fair value. And when that collapses, there's nothing holding that thing up. So get short at 475 and a quarter with $1 risk. That's only 0.25%. Second position short at 473. So now we're 2R. This is a 2R in hand with momentum because it just broke down below here. So add a second one immediately. This is also where it comes out of the daily dragon. This is where the daily dragon hits at 472. So when that thing collapses, it collapses further, and then it just keeps failing. So why not? And then this line here is the PSAR from the daily, and when that breaks, it breaks further. So just on those two positions, in a very relaxed manner, with a manageable risk of 0.25%, which is $1. That first one pays off from 475 or 475 and a quarter to 469 and 3/4. That's $5, $6. That's $5.50. That's 5.5 R. And then probably 3 R on the second position. 2 trades. Wait for the critical state. There's 2 things that make a critical state critical. It's something abnormal. It's either abnormally large move already so that you know it's in play, or it's an abnormally sideways quiet channel, meaning it's a Z3 pinch. And that means it's ready to break in either direction. So what do I mean? Why am I looking for a critical state like that, you ask? Good question. So the main idea is this. In condition number 1, where I already have an abnormal move, the first thing I want to see is a big, harsh move to the downside, a harsh winter. So when I go look at the MACD 4 seasons, I should see the winter condition, and I should see that signal line well below the Red River, which is the Bollinger Band around the MACD line. So a harsh winter signals that this was an extraordinarily large directional move. That means it is in play. What do I mean by in play? I mean it's in play because one of the directional traders just had a massive win. And when this thing starts stalling, in other words, it starts hooking up like a SSC, it's now in another critical state. Only now you know what is the size of the emotional move. That's leg 1. So it's either from this critical state where it has paused with a tight minimum manageable risk box, it's either going to recover back to the previous fair value, or it's going to fail downward the same size as leg number 1. It's going to give you leg 2. So from a tight risk box, it's either going to reverse and recover, and I'm willing to take half, or it's going to collapse further. So condition number 1 is you've already seen a move that tells you the traders are fired up and it's emotional and it's an exaggerated move. It's abnormal move already in play. That's the first type of abnormality we want. The first one, it's in play. An abnormally large move. The second one is the absence of that. We want this thing to be in such a sideways quiet channel that the Z3 lines are pinching. So it's not just an SQC, which will chew you up. When you're trading, you're going to see 100 examples of that today. Guys trading around in the middle of the river, trying to take every signal in every direction that it goes and just getting chewed up like hamburger meat. So what you got to do is wait for Z3P. The Z3 lines have pinched abnormally tight. And now you're ready for a big breakdown, like a collapsing dragon, like this one, or it's going to break out to the upside. And then you're going to get the abnormal breakout move. So you get large moves coming from abnormal conditions. And the abnormal conditions we want to see are it was in play or it is a Z3 pinch. And sometimes those continue to pinch for so long that all four regression lines join the price, and then you get a super pinch, which is a special case of the Z3 pinch. The only reason I'm not chewing you out for trading inside the Crocodile River is that you need to, lose 100 games fast. That's how you learn how to play Go. I sent a link around on that today. That's the Chinese advice. Learn the basics. Step 1, learn the basics. Step 2, lose 100 games fast so that you get over the idea that you can be perfect. You just have to be a little bit better than the guy that's losing on a sustained basis. So I don't mind you getting the stick time, but you've got to be learning the craft and not just taking signals. So I would ask you on every one of those trades that you're taking, answer the question, what was the setup? What is the pattern you're trading? What's the justification? Why was there an abnormality? What was abnormal about that created the conditions for a large follow-through move? So just try that sometime as a change of pace. The 10-minute, that is a slow day trade or a very, very fast swing. So now tomorrow, if this thing, what I said was on the daily chart, 469 was that crucial price. If this thing opened up down here, or even better, gaps down and then starts cruising back north, this is where I'm ready to start getting long again as a way to get back to the dragon, back to the Bollinger Band mean, which will be right about there, or the top of the dragon, which will be about there. So that sets up a nice intraday move. Can it move that far in one day? Yeah, it did in there in 90 minutes. It moved that far. That's only a 1% move. On the E-minis, on the E-mini contract, 1 penny is worth $10. This thing moved 500 pennies. One contract, that's a $5,000 move. And that's a $3,000 move on one contract. Learn how to trade the indexes. And remember your logic chain, find the mover, identify the abnormal condition, learn to sit on your hands. I'm not trying to be in the market all the time. I'm watching the market all the time, but I want to pick my shot. Let me know in chat if you found that helpful. All right, let's take a look at the boys today. All right, so for Charles, what I would ask you to do is to use the green dot and the red dot to help me see where the entries are. And this is what I want to say about trading inside the river. I can't see, I don't see any critical states in here, except maybe one, if I'm being, liberal on that. I see a swing high, a swing low, another swing low. Look at the distance in there. That's not really tradable. That's 40 cents. This is about the only one that I could even see is right about here. When you have a double bottom and you play an RLXD, maybe you can get that one. And then on a 3-minute chart, I'm taking the 1, 2, 3 exit and exiting here. So maybe that's a trade. And now you have the spring leading into the fall. I could maybe see that one. And then on this one where you have a high and it's the same high. Now maybe this is tradable. And on the 3-minute chart, maybe I can see a 1, 2, 3 and short when it crosses the dragon here with a stop up here, because I'm gonna put my stop where the PSAR is going to flip, which is the top of the dragon. And then this is probably a scratch. So there just wasn't much in here at all leading into the Fed. This is typical grinding. And yet we got, 1, 2, 3, 4, 5, 6, 7, 8, 15 trades inside Crocodile River. Now you came out of it with an R, but man, that is some heavy lifting. So know the time of day and know that it's a Fed day and wait for the critical state. My brother asked, does this affect the BMR if it continues down tomorrow? Absolutely not. That's why we have a 10% stop, is to avoid all the noise of these little 1-day, 2-day aberrations. A 10% stop protects you against that. Know the rules. All right, now here's the S&P. Now this is very nice. This is waiting for the Fed. And on the 10-minute chart, that's where that little Z3 pinch collapsed. Here was the Fed announcement. In 2 minutes, it goes up and then fails and comes out of the Z3 pinch. And he gets 1, 2, and then after this little chunk, he gets the second position in, makes a nice 1, 2, 3 cover for 5R. Now, there's an opportunity here that if you were going to try to trade that last hour between 3 and 4, this would have been the logical place right here. And I'm going to show you why. That you had leg 1, leg 2, and then it holds, and then it can't even get through the PSAR and then starts collapsing again. That makes this a collapsing dragon. And on this one, if you got that much of a move and started to reverse, you might as well just take that as a trade. But I like take the measured shot when it's there, 5R, and be done with it. Now, a lot of you guys are looking to get the second trade position on. What I would like you to do is don't do that. Do 100 trades where you are just managing the first position ruthlessly and clearly, and stalking the exit with the same kind of rigor that you are stalking the entry with. And then get clarity on what the value of the first position is. Because if that's good enough, what you're going to learn is, hey, you know what? Rather than try to squeeze a second position in, I'll just grow my position sizing and dollars at risk by a factor of 2. And that way you're cutting the cognitive complexity. You're taking 2/3 of the complexity out if you just concentrate on the first entry, the first pattern, and be ruthless about why you're entering and why you're exiting. After 100 trades, you'll know something about that first entry. And then you can work like Joe is on the second entry and being ruthless with that. But remember, when you delay that and you put the second position in, now when this thing starts retracing, you're losing twice as many dollars, and you don't have the cushion on this one because you delayed the entry. So all of the hard work that first thing is doing is being undercut by the second position, which hasn't earned much yet. So I really want you to concentrate on that first position and then a rigorous exit, and then understand what the first position is doing for you. And I think you need 100 trades to do that. Here's the other thing that I want to ask you to do on this one. What is the written rule set that tells you why you're getting long or getting short? What are your strict rules for why you're getting in, and what's the argument for why they should work? And that will take you back to, what's the pattern that I'm trading? Why should it work? And why does the current array look like the template? Most of these trades inside the middle here is getting chopped around in the river. All right, here's another one. I think this is Joe also. Right from the get-go, I'm going to declare that you were paying attention to what we said yesterday. Here's where the close was, had a little gap up and continues to go. He gets his MMRB and he just says, go for it, locks it in. It fails to go further, so he cashes a nice trade. Done. 1.5R. He found the mover. And now the next place that's of interest is either going to be in here or right here. Let's take a look at why those are critical states. Arguably, this could be the one because you had a Z3 pinch and you think maybe this could retrace back down here. But after a nice run-up day in the strongest stock in the strongest sector, why do you want to get short that? Just because you're looking at it? No. Get short the weakest things, like all the cryptos. The automatic stop and reverse in individual companies doesn't make all that much sense. Although if I was going to make an exception, the steals are like that because you actually do get some reversals. Now, why is this a critical state? Because it had 20 bars in which it failed to fail. And now you're getting the Bollinger Band mean rolling over. You're getting the compression. And now it comes into a Z3 pinch. That's like 10 cents. And now you get a Z3 pinch breakout. You'll get paid on that one. And you'll probably take the PSAR exit and you'll get paid there. The next place I'm tempted would be here, because you have a high, a lower high, another lower high, and it just broke through the belly here. That's actually a collapsing dragon. Now it would have scratched, and I'd have been tempted here because now I have the spring and the summer. But as soon as this thing starts rolling over and can't even make the previous high, then that's the end of all the goodness. Even the RL270 is rolling over. The RL270, which started up high, is now rolling over. That's a sunset on good news. So now let's take a look at this one right here. This is the other one you got to get. Why? I've got a Z3 pinch. The RL270 is rolling over. I've had a high, a lower high, a second lower high, and now I've got this little belly of the dragon and the RL10. Either this or this is my collapsing dragon. This one would be front running that collapsing dragon. So that's of interest. But good work on the front end and taking the shot you want. Get paid, get out, move on. Clear the deck, take a break, and refresh. Really good work, Joe. All right, so here's Alcoa. There's the gap. Here's the entry. Quick scratch. Now, after a winning position, you're quick to get out. On a losing position, you stay too long. But I do like the stop and reverse and getting paid. Now, what I want to say is, when you get the 1, 2, 3 entry or 1, 2, 3 exit right here, and there's your PSAR flip, your re-entry to the long side should be here. In that little elbow of the dragon, and it crosses here instead of here. And then this really gets paid. That's a great exit. This is looks like a quick scratch. This is a good short because now this whole thing is rolling over twice. Good short. It just didn't pay off. Now, this is a reasonable short. I'd like to see you get short in here, though. And then this one is, yeah, okay. But if you're going to be short again, then you got to get short right away as soon as it crosses the VWAP. So I feel like we're getting chewed up a little bit in here. This is a good shot. It rejected the VWAP, and you're playing for this. Good scratch, great reentry, and now it reverses. And then you picked up the winner there. So that's still pretty good all day. Getting a lot of stick time. And I would just be a little stricter on this. I think like your stops in here look like maybe 5 cents. It's pretty tight. But that's a lot of good practice on a stock that moves. That's good work. You're getting paid to learn today. Here's TNA. Here's what 12R looks like when you're not satisfied with yourself. That's a good problem to have. And I don't disagree. So the entry is late because this is where the turning point was. When it's uncomfortable, winter turns to spring with a PSAR flip. There's your entry. There's your risk box. Somewhere in here, you're going to get paid to here. This, after this little move and it resumes, I'd like to see you around in here when it reverses. And now you got a 1, 2, 3. That's where your 1, 2, 3 entry is. Then this becomes a scratch instead of minus 1.26. Now, the next thing that we want to see is on the failed upward move. We're in the middle of a sideways quiet channel that is compressing. Now we've got, see how he's got the abnormal compression indicated with yellow in the Bollinger Band main? That's how you get alerted that we have abnormal compression. This is telling you this is abnormally compressed. And now this Z3 pinch breakout, that's a Z2 breakout, or in here, either one of those is good with a tight stop in here. Excellent. Now, failure to follow through and reverse, it collapses again. Bingo. Second position, after this one breaks down out of here, second position. I don't mind that exit to lock in 1.5. Because I see that when this failed to recover back to the VWAP, it failed to make that move, re-enters, second position, third position, good cover, because now remember, you got 3 positions in. Each one of these little recoveries is losing 3 times on your first position. So you can't afford a lot of recovery or you erase all of the gains of the first 2 positions. That's why I'm not a big fan of a third position until you have a couple hundred in your skin, under your skin. But if you're going to do that, when it fails to follow through back to the VWAP, now you got to get short here rather than here. And then instead of 1.18, that's probably 3. And this is still a pretty good reentry, and there was more available. So he gets 12 and has identified an additional 13. So about 50% efficiency. That's a good day at work to have 12. And then with clear intention on how to improve. That's really good work. Notice how you go from the abnormal compression to the range expansion of these large moves. That's the beauty of these Z3Ps or super pinches. They're like little acorns from which you get the mighty oak tree, right? Remember the acorn, Z3 pinch. That's the one you want to crush. And then your collapsing dragons. And this one was really good. That one was really good. That one was really good. That's super. That's 4 really good ones in a row. And that's 12. Nice work. See, all of my previous comments about trading inside a crocodile river. And then when you get the Z3 pinch breakdown, that's not even close to your stop. And then this reentry is late, but that's a really good move and good exit. And then a really good reentry. This was a little unfortunate, and you could have been in there as well. All of this comes from this, getting chewed up, swimming in Crocodile River. Name the pattern you're trading and why there's an abnormality that's going to lead to a large reward against a minimum risk. Aussie dollar. This one is slow to get in, I think. When this rolls over, probably when it's crossing the Bollinger Band mean, that would give you a scratch in here. Then this is late to get in. When this fails to fail down to the VWAP, but then crosses here and the PSAR is flipping, we should be getting in right about here instead of all the way up here. That's almost a full R left on the table. And then actually lets you choose whether or not to get paid here. And then this was failure to fail. And there's your PSAR flip. And off we go. This is now you're trading inside the river. I like this one as a short position instead of waiting for all this. This one waiting way too long. When this one doesn't pay off, dude, you got to be out of there around here instead of all the way down here. And then probably mentally tired, and then realize, oh yeah, I got to get short here. So that is a full, this is where your R should be. That's almost 2R left on the table. And then this one, I think we got to get that in here. Unfortunate. And then we got to get this short here instead of here. So you got to be prepared emotionally and set for the next trade, not living in the moment of this trade. You already got to be, you execute like the battle drill, and then you're already stalking the next one, looking for that decision, not waiting to see what's going to happen. You already got to be looking ahead for where those next decisions are. So some good learning moments inside there today. Brazil, this is good work here. So Brazil was one of the big fails from yesterday. This is on 5 minutes. And then I want you to notice that when you have all this white space here, that makes these moves so hard to see that this is a really good short though, because you have a 1, 2, 3 here. You have a high, a low, a lower high, and now as soon as that crosses down below the dragon, you have a kata 2 to the downside. Now the collapsing dragon is right here. That could have actually been a second position. And then now on a 5 minute, you can't really afford to wait for that much retracement. I would be taking like a 1-2 exit and get paid. This is a good scratch. Now, when this thing PSAR flips, that's where we got to be short. And you'll get that and a good recovery in here. Here's the next collapsing dragon. Oof. Still getting paid. Learn on the 5 minutes. I would also try to see 50 bars of past behavior so that you get a much wider context. It's too much like, hey, what's happening over there? What is the larger trend line? Although you can see the 270 is starting to decay, so there's some downward pressure on this thing. But I'd say maybe add 50 bars of sideways view so that you can see what's going on. Luke with the Aussie and the 5 minutes. He's coming out of, there is the RL90. Feeling good. PSAR flip, 1-2 exit on the 5 minute. So when you're on the 5 minute and it has come out of the Z3 and then starts rolling over, he just takes it. 1.7. Now he's got an upward trend. So now he sees a low, a higher low. It held at the PSAR. So as soon as this thing gives him a 1, 2, 3, he's in with a tight stop, gets paid on a 1-2 exit at the PSAR. A little late getting in, but a good stop, good reentry, gets paid. I might have said, look, after this, what was wrong with that? That's the same exit that you use successfully over here. Z3 alert, when you get the Z3 line, like this, and then you have a little bit, the two dragon horns, when you have this thing chunking along, and then dragon horn, and it starts rolling over. Dude, just take it. That departs the Z3, returns, take it. And then this one gets you out here instead of down here. And then that's a full R instead of 0.6. Good short, good cover, good day at work. All right, let's see. That's not right. All I want is the page. Sorry about that. All right. So let's go to dashboard 1, still bullish normal, but now you can see the weakness creeping in on the 2-day and the 10-day, and even the 90 and the 30 have come out of the overbought condition. So that's how quickly this thing can turn. And now you notice that on the 10-day NDX, it's gone into oversold conditions, and that sets up overreaction and channeling posture in tech and emerging markets. So that's the one that is a high reliability signal to the upside. And the basic pattern is this. This is a swing trade pattern that, the thing is trucking along well above the 200-day moving average. And then a dip occurs, and then we're buying the reversal, or we're buying the resumption of the primary trend. We say that sell-off is the aberration. So that's what the overreaction signal does. When that occurs on abnormally large volatility, a 1-day adverse move, we think of that as an overreaction against news that doesn't follow through. And then the market comes in and buys the dip because of the belief in the power of the previous upward trend. So the overreaction is looking for volatile adverse moves. The channeling is more relaxed. It just looks to see Williams percent R get into an oversold condition. And that means sometimes it can drift down. In this case, you get both a volatile and a significant downward move. So the Qs and the whole tech sector is postured for a nice rebound tomorrow, if that hypothesis holds true. That's why when I look at the close and I put that nice tight box around it as a critical state, I'm ready for either a continuation of the sell-off or buyers coming in on the swing trade and buying the dip and driving that price back up. So I don't care which way it goes. I just want to follow the price on big moves tomorrow as soon as they come out of that critical state, that minimum manageable risk box. And then we have emerging markets with the same channeling. I'm less persuaded by them because they've been so weak. In fact, if anything, If we saw more weakness in emerging markets tomorrow, that would be a high priority to be short. Just a couple dojis today. Only 3 auto framers. Because of the size of the range, you don't get the multiples of the daily range going back to the 10-day high. So there's only a couple in there. But the one that's of interest is Microsoft. It's on a 5DD. It's on an overreaction, and it's 2.6 to 1 on the auto framer. For that reason, Pfizer and Cisco are interesting as well. So in the area of tech, I can now set up my radar screen for you hybrid traders out there. I can say, look, if the S&P tomorrow, my basic drummer, is up, but then the Qs or XLK are better, then I'm going to look to see, is Microsoft or Cisco, are they leading the way up because they are the most oversold tech elements? If so, then that's where I want to be. Or I can play TNA and just play the 3X technology sector tomorrow. If I see the sector working, then I don't have to squirrel around with the extra complexity of finding that target. I can just stay with the index. In the ETFs, no dojis today at all, and only one auto framer in the treasuries. So batten down the hatches. There's your treasuries auto framer with Pfizer, Microsoft, and Cisco. Yeah, only a couple squeezes today. Pfizer still is interesting for that reason. Still got a lot of summer going on. So a one-day sell-off doesn't mean anything except when you put it in context. What it does is it alerts you to the possibility of a critical state tomorrow. Oh, yeah. NVIDIA is always, my brother asked me, what about NVIDIA? Always lurking, always ready for the leading semiconductor stock in the tech sector. So that's a high priority target. You can see the extent of all the weakness today with all of the red. And only, again, staples, energy, finance, and materials have been the biggest winners, but even they were suffering. But they didn't suffer relatively as much as all the other ones have. In fact, energy looks almost immune to that right now. It's looking for inflation and increasing demand. And there's our steel company, Cliff. I snuck him into the Dow, even though he's not a Dow member. That's an alert. Now, that doesn't mean anything until we see where the follow through is. Remember, last time it did that, it gave a nice upward move. That was the last time the channeling worked. This time, the channeling worked. After that sell-off, 3-day sell-off, it then gave us that strong move. So this simply sets up a critical state ready to go in either direction. But we're right in the middle of the slope of the river, the RL30's slope. There's nothing exceptional about this move. We're right in the middle of the oscillation around the 200-day moving average. So this is just an ordinary pullback until proven otherwise. Came back to the middle of the river. So now it's poised for a channeling to the upside or a continuing collapse down below. So if it leaves the river, though, man, I'm short big time. If it breaks below that low and this low, well, then it's coming down to this low, isn't it? Yeah, it's going to come down to here. That would be about an 8% sell off from the high. So we got to be ready for big moves in either direction. All right. All right. That's everything we got for today. We'll get this published and posted, and we'll be ready for tomorrow. Good work by the boys in the room today.